We have with us Sailesh Mehta, the MD and Chairman, joining in on the show right now. Mr. Mehta, great to have you today on ET Now. Thank you so much for taking the time out and joining in. Firstly, on the 15-year gas tie-up that you've made with Equinor for the ammonia plant, help us understand, how does this work? What's the current requirement? Is there any mention on the pricing in the deal? So you'll have to unmute your mic.
Oops.
Not a problem.
What? I'm unmuted. You can hear me now?
Yes, I can hear you. Go ahead, please.
Okay. So it's been an excellent deal that we have been able to tie up. It's for 15-year needs of our LNG beginning from May 2026. And this adds up to almost around 0.65 million tons, over the 15-year period. It's a sign, as you are rightly saying, with Equinor, which are the Norwegian giants. They've been in the business, oil and gas business, for almost over 50 years and operating from 30 different countries with a market cap of 75 billion. So they're very well established in this marketplace. So the long-term tie that we have with them is, of course, formula-based. But we believe that it is one of the most attractive, arrangements that's been done in the private sector in the recent times. And we have a little additional tonnage that we have also tied up, which could be well utilized for our growing captive needs, or it could be also utilized for trading. So that will pave the way for us to come into gas trading. So that's the broad dimension on Equinor.
Since you mentioned formulas, is there a long-term fixed price, or are there formulas of a spot price?
So it's a long-term formula price linked to Henry Hub. So in that sense, as the market changes, we will also, swing with the market.
Okay. And if this deal would
But
have...
it's a very attractive linkage to the Henry Hub.
Okay. And before this, what was your feedstock arrangement? Were you buying from the open market?
So as you're aware, over the last few years, we have been importing ammonia from the Middle East. And that requirement for a downstream itself has reached to almost 500,000 tons. And which is why we had taken up the project of setting up an ammonia facility next door across. And that got commissioned, middle of last year. We have just recently also completed our guarantee test runs. So all capacities, efficiencies have been very well proven. Now, for the ammonia plant, we were requiring LNG. And that's where the Equinor gas contract sits. So now we have a very solid value chain. LNG, ammonia, building block nitric acids, then for fertilizers, for industrial chemicals, for mining chemicals. So that is the broad value chain that is now very strongly emerging thanks to this, tie-up.
What are the riders in terms of if there is a non-availability of this contract? What are the riders in place? Because ultimately when it comes to availability of feedstock, that's also a function of what's happening in Russia, Ukraine. There are so many factors there.
I agree. So what we have done, this tie-up is from their tie-up in the US. So that's the most stablest kind of flow of supply. The other is, of course, they have their own manufacturing, they have their own investments into LNG. So there is a good backup. And Equinor is known to, support their long-term customers. So that aspect has given us a very good assurance on the gas contract.
The other thing I wanted to understand was, and I'm just getting back to Equinor, how much of margin benefit you think you will derive owing to this contract?
So broadly, since it's a long-term contract, it would be a little speculative to look at it from a margin accretion perspective. But from a broad perspective, if we look at it, that ammonia prices have ruled from anywhere from $800,000 to maybe $450, $500 odd. And now we will be manufacturing ammonia next door, and with these attractive gas prices. So we will see a definite margin accretion. That's one. The second is we'll be able to contain the volatility. So now what has happened is in the basket, if ammonia prices go up, the ammonia business benefits. If the ammonia prices are lower, the downstream benefits. So we will be able to capture that value within the group. So that is the advantage. The third is, of course, the port congestion and other aspects. We are also looking at with this a good reduction in the carbon footprint that will emerge. So all those aspects will emerge now with this complete end-to-end tie-up.
I go back to your quarterly numbers. Revenue down 23%, EBITDA down 50%, PAT down to 75%. Will you make it up? Will you make it up in coming quarters?
So broadly, if I might say two or three things. One is, of course, this is getting compared with the last year, which was our historic best. And that aspect of it, needs to be kept in mind. When we look at a 5-year average, we are fairly well, in a decent shape. Having said that, we did find that there was an excessive dumping from Russia. And that had emerged because, Russian products are having sanctions from the other countries, and India is becoming a good dumping ground. So we as an industry have approached the government saying that, look, we have all in the industry put together are putting in almost over 5,000 crores to support Coal India and in the coal mining. And then, to allow this kind of dumping. So the government is sympathetically looking at tariff, non-tariff measures, hopefully post the election that would be coming through. Having said that, Coal India, as we see, have come up with a very ambitious target, and they want to almost move into 100% domestic coal-based, thrust. And that is going to give a very strong flip to our mining chemicals stand, where we are seeing, that the growth fueled by the Coal India needs could go up to almost double-digit CAGR growth. So that aspect we are seeing as a positive current in the short, medium, long term. And lastly, we are also seeing that the fertilizer need, urea and fertilizer grade ammonium nitrate, that is going to come back to normalcy. And that will also reduce the pressure on this dumping. So I would say in the next few quarters, we are certainly seeing, the positivity emerging, because there's nothing impacting demand. It is only in terms of this dumping. Somewhere even on the fertilizer policies, the government has recently come up with, good clarity on reasonability of margins, and that will get the nutrient-based subsidy scheme, which was somewhat off track, where it was fixed subsidy, free MRP. MRP was kind of put a lid on. Now with this reasonability guideline, it is giving the industry a good headroom to bring back innovation, to earn back some of the margins. So next few quarters, we are certainly seeing the positivity emerging on all those sectors.
Final question is that while you've entered into a 15-year tie-up for gas feedstock supply, the government is of the view that ammonia needs to be converted with green ammonia. Now, when the structural change on environment and the green ammonia talk is coming back, you are tying up for 15 years with the old ammonia feedstock. Could that be a challenge?
So if you know that even GAIL, even others have looked at, and globally also, there have been tie-ups of 15 years, 20 years, 27 years. China is tied up and so on and so forth. What we see is that certainly the conventional grey ammonia is going to continue, and green ammonia will begin its entry, because green ammonia today is rather expensive. And unless there is a fair degree of subsidization, it is not going to pick up. Having said that, our grey ammonia also, we are looking very actively to utilize the CO2. So we will move up to a blue ammonia status as we find better and better uses. We are even talking to the gas sector to look at enhanced oil recovery. So it's a win-win, where CO2 is pumped into the old fields, and through that, the leftover oil is pumped back. So it's a win-win kind of a thing, which is being done world over. So we are, looking at bringing it into India also. So from that perspective, we see in the long run, continuation of the traditional ammonia. In fact, growth also that will come in because of various needs. And of course, like the renewable energy coming in, green ammonia also coming in with a percentage, a certain percentage, to support the downstreams.
Sure. Okay, Mr. Mehta, thanks so much for making time and explaining to us in detail what the entire pulls and pushes have been in the chemical sector of late. Appreciate your time today.